Welcome to the latest Motley Fool scoreboard. I'm Anand Chokkavelu, and we've got longtime fools Matt Frankel and Jason Hall giving a 1 to 10 rating to payment card enabler Marqeta, ticker symbol MQ. Rate the strength of the business first, including factors like industry and all that competition. A 10 is invincible. A 1 is hopeless. Matt's at a 7. Jason, you're just at a 6.
Yeah, this is a big and important business, and there's a lot of growth. But what's becoming less clear to me is whether it has much by way of actual moats, true economic advantages. For example, total payment volume was up 29% in the fourth quarter. So clearly more use of its product, but its revenue was only up 14%, and gross profit dollars it earned were up 18%. Now, look at the full year, 2024, TPV was up 31%, but gross profit was only up 7%. Now, part of that's a change in the product mix, but again, it doesn't bode well when you're a take rate business.
Yeah, and I said a 7, but I could have gone a 6 just as easily. Their customer list certainly is impressive. I mean, Block uses them, Affirm, Instacart, Uber, JP Morgan Chase is a customer. They're actually the third largest issuer of debit and prepaid cards behind Wells Fargo and Bank of America in the U.S. Instacart uses them for payment technology. A lot of people who are watching this have used Marqeta without knowing it. There are some competitive concerns. SoFi's Galileo is a big one that's really just getting into the debit card space. So that's one to watch. But Marqeta is the leader. My biggest concern is that they're very dependent on their largest customer. Block is something like 70% of their revenue.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Both of you are at a 5, Jason.
Yeah, it's been an absolute mess in the C-suite for a while. The founder, Jason Gardner, sharing a name with me and the founders of the Motley Fool, along with the company's board, was sued by shareholders because of a share repurchase, you could almost say scheme, it was alleged, that would potentially have let Gardner kind of backdoor gain control of the company without paying a premium to buy out existing shareholders. Fast forward a little bit, and his replacement as CEO, who came in 2022, is now out, and it was very abrupt. You have a temporary CEO in place. This is a dynamic industry that's going through a lot of change, and the business doesn't have a clear leader or strategy, I don't think. So that's really concerning to me.
Yeah, Jason's right. The CEO, he abruptly resigned in February. It was one of those things where the press release said he and the board both agreed that it was time for a change. Agreed, I put in quotes. The interim CEO, Mike Milotich, I might have said his name wrong. He's been with the business for a couple of years, but he's really an untested leader. He was previously an executive at Visa. So that, nice resume, but untested leader at a time when the business really needs to figure out where the next phase of its growth is going to come from and where its profitability is going to come from and things like that. So it's really mostly from uncertainty that I gave it a 5.
Yeah, last time we did the scoreboard on Marqeta, Mike Milotich was the CFO. He's still the CFO, but now the interim CEO as well. It's often not a great sign when all the C-suite changes between scoreboard tapings. Let's move on to financials. A 10 is a fortress. A 1 is yikes. Both of you have a 6, Jason.
Yeah, so Matt's going to describe some of the positives, but I want to hit some of the negatives. There's a shrinking take rate on the business side that we talked about, and executive compensation is huge. Total compensation that it paid was higher than gross margin dollars last year. You still have all of the other operations to fund as well. So it has a strong balance sheet. Matt will talk about that, but it's a necessity. It's not like it's a tool that management can really leverage.
Yeah, and Jason's right. I'm going to talk about some positives, but I gave it a 6, so I'm not going to be that positive. Really high gross margin. They're adjusted EBITDA positive. They're not net income. They don't have positive net income yet, but all the metrics are improving. Payment volume is growing. It was up almost 30% year over year in the fourth quarter. And Jason mentioned the balance sheet. It is a big strength. They have $1.1 billion in cash and equivalents. It's only about a $2 billion market cap company, so that's a lot. One big negative, in addition to executive compensation, they're giving out way too much stock-based comp. They spent $155 million on buybacks last year and barely offset the dilution from stock-based comp. So, and I mentioned a $2 billion company, so that needs to improve.
Matt, let's move on to valuation. How well will Marqeta stock do over the next 5 years? How safe is it? 10's a sure thing, 1's a lottery ticket.
For 5-year returns, I said 5 to 10%, just because that's like the mean scenario. I wouldn't say it's very likely. For safety score, I gave it a 5. I really don't see any scenario over the next 5 years where Marqeta just does okay. It's going to be a very binary outcome. If it can figure out how to take it to the next phase of its growth and to get all of its metrics heading in the right direction, improve margins, etc., this could be a multi-bagger in a few years, but it could be a $2 stock just as easily if they can't figure those things out and the C-suite continues to be a revolving door. So 5 to 10%, but take that with a grain of salt.
Yeah, I think I agree. Although I think there is a case for okay returns, and that is maybe Jason Gardner just moves away from his involvement in the business and they bring in just a caretaker CEO who does okay and their advantages continue to erode. But there's enough of just a tailwind of growth in the industry that the stock does okay. But it's probably, like Matt said, not very likely, which is why I gave it a safety score of 5, because I do think it is probably going to be more binary. And partly it's going to revolve around, I think, Jason Gardner. We've seen him go from CEO to executive chair to just a board member in 3 years. He's still the largest shareholder, though. The founder of this business, is he going to lean in or lean further out? And honestly, I don't know which would be better or worse for the company. That's concerning. He's said himself that it's a lot different leading a publicly traded company and harder than a private one. And I don't know that his skills or his maybe evolution as a manager and his style would necessarily work in the public market. So there's just so much uncertainty there around the outcomes, which is again why I gave it that 5 on the safety score.
Time for everyone's favorite top it. There should be some good ones here, Matt. What do you like better than Marqeta?
Probably won't surprise anyone. I like SoFi better just because you get the Galileo platform, which is kind of an earlier stage Marqeta, plus all of SoFi's other businesses. So I think that's my favorite in the space.
Yeah, I don't want to say you'd get Galileo for free if you buy SoFi with all of its banking and financial services business, but it's there and it's pretty compelling. But in the spirit of being Motley, I'll say that Toast looks compelling. I know it's not the same thing, not really even a competitor at all. But finding businesses in the payment space with differentiation, Toast has that for restaurateurs, makes money on transaction fees, processing those cards that Marqeta and others are providing, but it gives its restaurant partners a ton of other tools that other payment processors just don't come close to matching.
Bonus points for Galileo as a name for SoFi. Thank you to both Jason and to Matt. They've given Marqeta a low overall score of 5.5 out of 10, with no category averaging higher than a 6.5 or lower than a 5. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Sci Time. Till then, Fool on. Actually, it would be fun to play Scrabble with just company names. This would be a key winner.